Happy Thursday afternoon, everybody. If you were trading today, I hope that it was a productive and fruitful day for you. And if it was not, hopefully what we do today can give you something to lean against as we go into tomorrow, the day after, and the day after that. And so the focus of today's webinar is using profiling as a way to organize market data to find reliable support and resistance levels. So as per usual, if you've been on any of these webinars that we've done here over the last couple months, I've got a couple key concepts that I'll go through, and then I'm really going to spend the balance of the time looking at some real life examples. In fact, we'll just look at the trade today and a couple of instruments. And then even if you have specific instruments that you trade that you'd like for us to take a look at, feel free to throw those in the question box. And when we get to looking at examples and doing some Q&A here in about 20 minutes, if not sooner, then we'll start to take a look at those. And so it's not just looking at an example that you're not necessarily familiar with, but we're actually looking at stuff that you look at every day and you go, oh wow, this is helpful, and that's my hope. My hope is that this is a productive and helpful webinar that gives you some tools in your toolkit for being a better trader. I think it's kind of why we're all here, is that we are in markets and we want to continue to be successful in markets, and that's the way we go. So just real quick by way of introduction, I don't know that I've ever done this before, but so my name is Josh Schuler. Just a little bit background on me. So my early professional career was in tech and telecom, and then I spent some time working in nonprofits. I started with stock flips in 2009 as I was doing some grad work, and it was a great time to do stock flips because really everything went up. And then I got introduced to equity options in 2010, played with those as a way to do some leverage and work around having a smaller account size but wanting to participate and grow my account. I moved to being a full-time trader in 2012 and have not looked back. Started looking at futures in 2013. I trade exclusively futures now. So if you want to look at some stock examples, everything that I'm talking about applies, whether it's Forex, stocks, or futures, but that my context is in futures. And currently, aside from trading my own book, I'm a mentor with the Market Profile Trading Academy. I'm a Series 3 commodity broker, and I live in Fort Collins, Colorado. So that's just a little bit about me. So let's fire away. Again, this is going to be somewhat of a broken record. If you've seen any of these webinars that we've done, I put this one in almost every time, and I think I put it in because ultimately that's what I believe about markets and being successful in markets, is that businesses excel when they can see opportunity and capitalize on it before the opportunity is gone. By the time the trend has developed, it's too late. We can all develop or all see a trend happen. The question is, can you see it before the trend happened? So we're going to look at an example here in the Nasdaq from today's trade. And you know what? It was a trend day, and I was long. It was a long trend day. Easy to identify after it had happened, and then you go, well, do you get in it, or is it too late? No, it's too late. The place to get in was before the trend happened. So just like this is true in businesses, it's true in markets, it's true in trading, and it's something to try to wrap your head around, especially as we talk about this idea of support and resistance. So now when we talk about support and resistance, what is it exactly that we're looking for? You may have different things that you're looking for when you talk about support resistance, but here's things that I look for when I think about the idea of support and resistance. One is I'm trying to know how do I know when I'm right? Like, how can I confirm that I've taken the right position, that the market, I'm reading the market correctly, I'm in the flow with the market, and then how do I know that I'm right? Second, how do I know when I'm wrong? And this may in fact be more important than knowing when I'm right, because if I can manage my losses, if I can manage my risk and define that risk, then I am in a much better place. And that that actually leads to the two other ones, is to how to define potential reward, and finally, how to define potential risk. They're all related. Obviously, the reward related to when you're right, and the potential risk to when you're wrong. You know, if you're a trader that approaches with a set risk reward ratio that you're looking for on every trade, and you know, if that works for you, awesome. You know, I try to look at, okay, where can I define some risk, and what's a potential area that we could perceive, and is that attractive enough to me? And so that's what I think about when I'm looking at support and resistance, and you know, we'll see that in a couple examples from today. Okay, a couple key concepts to bear in mind as we go forward looking at these examples. One is, and I'd write this down, price is not as important as time or volume at a price. Price is not as important as time or volume at a price. So what I mean by that is, we may see a price and you may say that it's an extreme, but what is most important is not whether we saw that price, but how long did we spend at that price. It's similar to being in a housing market. You know, I can obviously see a house that sells for something way above what the market is, but it's not as something I lean against as much as something where the you know, comps are, where prices are over and over and over again. Okay, that's concept number one. So price is not as important as time or volume at a price. And in fact, let's just look at a specific example here. This is Nasdaq futures today, and you can see that we spent a lot of time here at hang on one second. All right. So you can see that we've spent lots of time at prices, but there are prices on this chart that are more significant than others, and ones that we can lean against than others. One that I can lean against specifically is this 47.58. Why is that? Because over the past 5 days, we've spent more transactions at that price than any other price. So if I look for this market to try to find a place to get support to go higher, you know, where's it going to go? That's a place that it's likely going to go, because there's been so much agreement about that price, and that's a place that I could define as a potential entry if I wanted to get long. So price is not as important as time or volume at a price. Concept number two. Value is held in the eyes of the player who is in control. Value is held in the eyes of the player who is in control. What do I mean by that? I mean that whether it's large institutional dollars or it's a day trader, you know, what time frame is the trader who is ultimately in control operating in? If it's a day trader who's largely in control on the day, you know, what prices are and areas of support and resistance are important to them relative to somebody whose time frame are days and weeks and months. I mean, if a Warren Buffett or Carl Icahn or Ackman or any of these guys, you know, put a position on, I mean, they're thinking in terms of months and years. Do they care whether we are close to yesterday's open price or not? No, they're not. They want to own it. That's it. Now, if I'm a day time frame trader, maybe I'm sitting at a prop desk, I got to clear my position out at the end of the day. Do I care about where I am in relative to yesterday's prices? I absolutely do. So by discerning who's in control on a given day, whether it's someone that we call the day time frame trader or the other time frame trader, it helps me discern which support and resistance levels are relevant. You know, for example, if I was looking at, if you were looking to short against this level here, which was a fairest price from yesterday in the Nasdaq in the session, and this offered pretty great support if the day time frame trader was in control. Thing was, today the other time frame trader was in control, so nobody cares about this 47.50 level. We just blew straight through it. We spent a little bit of time at it, and then once we got above it, all bets were off, and people didn't really care about the price. So in that sense, yesterday's price didn't have a whole lot of relevance in terms of a resistance, because the person who was driving price didn't care. So that's concept two. One more concept for you, and that is that levels adjust as the auction continues. So if you mark up charts, if you're putting on different levels, they have different degrees of relevance as the auction develops. One of those is the idea of something that I call a naked point of control. So think of a naked point of control as a price or an accepted price at a certain time frame that we have never gone back to check and see whether it's valid. One of those that you can look at over and over again is that you can look at a weekly chart and pull a profile, a volume profile on a weekly chart. And by the way, if you're unfamiliar, so this is 1 week of trade. These are 2-hour candles, and this profile or this histogram is representing the amount of relative volume that was traded at a price. It's volume at a price. And there are specific behaviors, which we're going to talk about as we look at examples, that occur whether this histogram is built out or whether it's got some holes in it. But as you can see back here, this is all the way back to the beginning of July from this last year, that there's a price here at 44.34, and we've never traded back across that. But if you look at subsequent weeks, you can see we often trade and cover up naked points of control. In fact, we covered this one that was here at 47.40. We covered that last week, and lo and behold, we actually had one coming into today, which was at 48.21, and guess what? We touched it on today's session. So that's something that I look for, and I will mark those as relevant until we touch them. And then once we touch them, then I don't look at them as much. So that's the idea of that the levels adjust as the auction continues. So let's look at some specific examples. And again, if you have a specific example, go ahead and throw that in the question box. Because I'm going to run out of examples and we'll be out of here, which may be fine. But this is also an opportunity for you to specifically look at some examples. And I want to look specifically here at the Nasdaq, and specifically using this software. So this is Window Trader Blue, an absolutely fantastic software in terms of being able to establish levels of support and resistance to look at in a coming day. So what we're looking at here are each one of these profiles. These are time price opportunity profiles. However, they are set to show me an intensity of volume at specific prices. So just to give you an idea what we're looking at, these deeper red colors is a higher intensity of volume. The magenta is less so, and then the white is the lowest amount of volume. And then each of these profiles, these little letters, are what we call a time price opportunity. And that's essentially showing us at what prices were we seeing at specific time frames, i.e. 30-minute increments. So each letter corresponds to a 30-minute increment. So as I'm looking at Nasdaq trade tomorrow, let's just go back and look at today's trade. So today's trade is something called, in terms of a day type, it's something called a trend day. And note a trend day by a number of different things in the structure. One thing is that it's a very long day in terms of relative range. I think last time I was doing my homework last night, we're somewhere in the ballpark of about 56 points is the average trading range for the Nasdaq. Today we got up to 104 points in the full session, a little bit less than that in the real-time session. So when you have a trend day, very, very elongated trade. So extended ranges is one of the markers of that. The second is that for each 30-minute increment, we have either a higher high or a higher low that doesn't ever get canceled out. And so you can see as these are the 30-minute breakout of the day, that as the trade went higher, we never, really kind of came back. We'd spend a little time and then push higher and spend a little time, and we're still, fairly high. There are predictable behaviors on a day following a trend day. One of those is that we're likely going to go higher. Very rarely do we have a trend day that, one day, we go up and the next day it just goes right back down. And we actually had one of those last week. It was a little bit of usual, but in this sense, that you have to parse out what's likely to happen from what can happen. Could we absolutely reverse tomorrow? Yes. Is it likely to happen? No. But in terms of support and resistance, whether likely or unlikely, I have some levels that I can look against that can help me. So one of those you can see over here on the right. This is what's called a composite profile, and this profile is all of the volume at a price that goes back about till 724, way back here. I'm really only looking at that because what I'm looking at is I'm looking at all of the volume. See this whole zone right here? These are all days where we're looking at basically the same prices. In fact, I can go in here and look at all of these days as one composite. We get a very, very interesting picture. Let me just check one thing here. Excellent. Okay, so one thing from today's trade, I was looking, I was long early in the day. I was looking to get short. I got short actually at 22. The reason I got short at 22 was because there was an area up here where we had spent a bit of time at price, enough that it protrudes a little bit, and there's a little bit more of a higher intensity of volume. So, but that was just a day trade, so I took it off 10 points. But you can see this large area right here that is just really thick in intensity. Okay, so this represents a high agreement of price and volume at a price that goes all the way back to the beginning of August. This is an area that whenever you have a large build out of volume, the behavior around that is that the trade will slow and give you an opportunity to make a decision. We punched straight through that today. So that's telling me that as I look at tomorrow, that really unless we got back below this big zone, so this is actually a big zone of support here, unless we got below this zone, I'm expecting this auction to move higher and potentially take out these old highs up at at 38, 39. Now, however, if we got below this zone, then this becomes great resistance. So I'm using these zones as support and resistance, and I think that's a key distinguishing, using profiling to support zones of support and resistance relative to if you look at a classic chart, where someone's just looking at time and price, they may say, oh well, there's an extreme at the top, and I mean, is that an area that I could use to look at rejection? Absolutely. But in terms of knowing, am I wrong or am I right? I look more at zones of areas where I can say, okay, look, if we're, as long as we're in this zone, I'm okay. If we break below that, then something's changed, and I'm going to do something different. So that's where I'm using profiling as a way to discern support and resistance areas. So right now, I mean, any test back into this zone, in fact, all the way back to this, this 99, really to 94, if we were about to open right, tomorrow, I would say, hey, I could buy that, and if we trade below this, then I'm going to watch the behavior, but I may clearly be wrong, and then I would potentially exit the trade. So that's a place where I'm using these zones as a way to do that. The behaviors around a high volume node or a high volume area like this is that it tends to slow the trade. Now what's great about this is it gives you an opportunity to make a decision. And as traders, one of the things I'm always looking for is I want to know, I don't want to just like have to make a really fast decision. One, because I'll put a stop order out, for example, at a fixed level, and as soon as you put an order out, they can see it in the book, and sometimes they'll come get you and then return back the other way. So by using levels like this, it allows me to even say for example I got long in here, I could say, all right, clearly if I get below this tomorrow, I could be wrong. So I want to have an alert if I bought this, and then I'm going to have if we break below that, then I'm just going to watch it. And if we snap back, snap down into this lower volume area and come back, then it went and tested in that low volume area, rejected and came back, and now it can go. So that's then I could put a hard stop in. But usually on the first pass, I don't put a stop in because they do these things where they'll go take the stop out and reject in the other direction. And I want confirmation. And confirmation is shown through a build out of volume. This is one that a lot of people, I struggled early on to understand this, but like how do you know whether the trade is going against you or going for you? What's one of the confirmations? And one of those is price pulling value. So for example, the reason that we continue to go higher today is that even though this profile is very elongated, okay, I mean you can see how all of the white and these other things that we call single prints, basically where we only touch this price during 1/2 hour segment. Some people would say, oh well, I need to get short. However, as the day went, you could see that we would build out volume in an area, and we'd continue to build out volume higher. In fact, you can see right here, this is the fairest price of the day. Now, it's not, did we spend the most time there? No, but we did the most business there. Right there at 47 or 48.1750. So as the day went higher, we were confirming with pulling value at a higher price. Now tomorrow, in terms of a support and resistance, these areas of larger acceptance are things that I can use for to lean against in support and resistance. So tomorrow, for example, if a day time frame trader is in control and we get below 48.17, I can actually use that as a zone to lean against to stay short. And then if we got above that, then I would be looking to see the behavior and potentially exit the trade. And again, that would, because that's a reference from today, I would need to see that the day time frame trader was likely in control, meaning we don't have a lot of range extension, that ranges are muted, and that we're opening inside the prior day's range. If we're outside of that, if we have really wide ranges, if we come down in the zone and quickly pull out, then I'm gonna know that I'm wrong. And again, it's that whole idea: am I wrong or am I right? But I use Window Trader because, for example, on this platform, I can't set up specific composite profiles based on the time frame that I want. I'm kind of forced into one. For example, this composite profile is a 90-day profile, and it's just set, or a 180-day. But what I really want to see is, I want to look at this bracketed area really here from 1020 down to 935. And why is that? Because we've basically been trading across the same prices, so we're in a balancing zone, and that's what I want to focus on to get levels. And with Window Trader, I can just look at just that data and pull a composite profile and get far more accurate levels to lean against than I can with a product like this. But if we're looking at today's trade in the beans, so I was noticing a accumulation at the bottom of the weekly range. So we had a lower low on the week, even though we've had a higher high also. So it's kind of an engulfing week. We're close to the bracket low here at 937, and I was seeing all of this build out of volume. So my premise coming into today was that 945, the fairest price on the week, was a level that you could lean against. You could either lean against to get short, or you could lean against it to get long. I personally looking to get long because I had all of this location ahead of me, and if this thing, got above 945, we've got some pretty nice targets in terms of, kind of 954, and then back up here to 966 in terms of what I'm looking for. So I was looking for this, and we broke. Actually, let's go and look at this level. You can see that we kind of opened and bounced. We tested lower, came up to that 945, tested lower again, and then came through, and that's where I got long, right here on this next test. And then from there it was, hey, stops below the low of the day. So what this allowed me to do is allow me to clearly define the risk. I'm basically saying, hey, I'm going to take 5 cents of risk, and I've got zones above me at 50, which was from the prior day. I've got 54, 56 up here, and then on composite I've got potentially as high as 63. So I liked those areas. I liked the fact that we had traveled quite a bit in a little bit of time, and it allowed me to really define the risk. So that's something with profiling that allows me to see, because I can see all of this business. It's harder to see that on just a time price chart. Now, not to say that guys don't do that, but I think it's like someone recognizing the presence of something without recognizing what it is. So you'll hear classic chartists just talking about that they. Here we go. Let's see if our soybean data has pulled yet. Yeah, here we go. Not yet. You hear them talk about consolidation, zones and stuff like that. So I mean, they're recognizing this idea of balance, or an area where we're building out volume at a price, although they don't call it that. But this allows you to more clearly see where those levels are and make informed decisions. Okay, let me look at one other example from today. A trade that I took was a crude long. I can't show that in Window Trader because I just signed up for NYMEX, so I need to pull that data. But similar premise to the soybean trade is that I'm looking at crude kind of balancing here between the last 3 weeks, and I was looking at this high volume node. So that here's an area, where if we're below it, it can be a form of resistance for us. If we're above it, it can be a form of support. And I know that we're going to kind of churn inside this zone. The behavior in a high volume area is that the trade's going to slow, which gives you an opportunity to make a decision. In these low volume areas, we can go across them very fast. We can also reject on them very fast. Think of it like taking a stone and just throwing it across a pond. It's either going to skip or just, it's a little bit like these low volume areas. But same premises, the beans. I was looking for us to move above this area, which you can see more clearly here at this 43.92. We took an initial stab lower. We came back. I got long at 43.92. I took it off at 44.37. It is not a coincidence that the place that we stopped, see this 44.35, equates to a high volume area from the prior day. And why is this important to this level? It's because we're inside of the prior day's range. There's not a whole lot of other time frame participation. You got muted ranges, so this level is important. If this level had not held and we had said traded all the way back up into this chunk of trade, then I would say, hey, there's something different going on here, and there's a different player in control, because they're not as concerned about some of these levels that we had tested before. That's just kind of a key way to be able to know that. All right, let's look at some other questions and see what we can go after, and see if we've got some specific examples that we want to look at. Somebody said that you noticed a big difference from volume and time if you use monkey bars in Thinkorswim on particularly a daily time frame. When deciphering which one to use, I find volume is more reliable if time is sitting at a much higher or lower level. So if you use product like Thinkorswim to do profiling, here's a couple things that you have to know. One, you're not getting tick accurate data. So they are delivering you data in 1 minute bars, and they're also doing a degree of smoothing. So they're taking an average of what those prices are, and it's not always very accurate. By and large, it's close. Like if I was to pick, if we look at, look here in Window Trader, and so that was that 48.17 level. If we look at Nasdaq on TOS, you can see we're pretty close here. But what I have seen as a day will progress, I've seen Window Trader alert me to a shift in the point of control faster than TOS, just because you're getting cleaner data, and that's because you're paying for clean data, where TOS they're just giving it to you. Next question is, on NQ chart in Window Trader right now, would you use the top of the playground as resistance for the current day like today? Would it be an area you would take some off? So this whole, the question was around this whole playground here. And would you use the top of that as resistance for the current day like today, or would that be an area you would take some off at? It's an area that it's a way that can help you make a decision. So any trade above this, I gotta say, even though the macroeconomist in me wants to short the heck out of this market, we clearly moved right across this whole area of value today. Whatever the motivations are, it is what it is. And so if we come back and test this area tomorrow and find buyers, then I think you go with the move. Now, if we don't go and test this and we just keep going, you are getting into an area up here where there's not a lot of participation that's taking place, and that could be an area where we find some resistance again. And these low participation areas are an area of support and resistance, just in a different way than a higher volume area. The behavior that I would be looking for up here would be maybe a punch through and then a snap back, or a punch and run. And if it punches and runs, then clearly that level is one we don't want to do business, and we'll go higher. I hope I answered that one. Okay, next question had to do with classifying unfinished business as a gap down or up on an intraday or daily time frame. I think I know what you're looking for here. Let's take this out here. This doesn't pertain so much to support and resistance as it does discerning who's in control and how would we know when that's changed. So, for example, here we have a trend day. This is a lot of range extension, meaning that when I mean range extension is the daily range is being extended particularly past the initial balance, or the first half an hour of trade, which you can see goes all from here, 47.81 down to 47.41. It's about 40 points. One of the things that I look for on the day following a trend day is halfback, which Window Trader is great because it just marks it for me right here at 47.82. This would be a key level to defend. There's also, you can see this is an area of single print, a price spike where we move swiftly across this area, didn't really check to see if it was valid. Anytime you have a single print in the auction, here's another one. Okay, some things to consider. One is that there was somebody who was long up to this, and then there was somebody who got long again with them. I mean, there was more buying that took place. Below this level, at the top of the single prints, whoever got long here, if they're still long, might look to change their mind below this. It might get nervous. There may be stops down here. So I look at these areas of single print as places of unfinished business that are likely to be revisited again at some point in the future. It doesn't mean it's today or tomorrow or 3 days from now. It just means, you know, at some point, it's very likely that we'll go repair those. You can see that on Fridays, on the last couple days this week, from Friday where we've had that first initial move. You know, here's the open, here's single prints, here's single prints, here's single prints. Especially anytime I see multiple areas of single prints on a specific day, lots of single prints down here, lots of single prints down here. Look, the next day we went back and traded through a lot of that, right? We cleaned up almost all of those. Next day, got some, you know, a spike, single prints. You know, where were we yesterday? We cleaned it up. I mean, that's when you have an auction where there hasn't been a lot of agreement, you can look for us to go back. So I do look at those as particular areas that we may go to. If we're moving swiftly across and creating those, that's indicative of telling me that the other time frame trader is control, and levels that I would look at are wider in their scope than if it was just a day time frame. So that's why I was looking at that 48.22 level to short at the end of the day. It's because clearly other time frame traders control. So we're going to go higher and further than we think that we will. But I also know that, you know, at some point day time frame traders jumped on this move and they got to balance their inventory. So at the end of the day, there's a good high probability counter trend trade that you can take, you know, once this thing kind of triggers, and it was, you know, losing steam here at the top of the profile, you know, running out of steam, you know, right up here at the top. And this 22 also happened to be, make sure I'm looking at that. Yep. It was by a TPO or time price opportunity. There was a naked point of control here. So the volume point of control was higher at 28, but the naked point of control for time was here at 22. So that's an area where, you know, time at a price and volume at a price are looking at. I was looking at 22. I was also looking up here at 28. But that's an unfinished business that we went back to test, which is why it was a potential target for today. Another question is, can you make your own custom profiles according to data sets like you can in Investor RT? Yeah, absolutely. I mean, you can. I can take, for example, another reason why I was looking at 22 as a level was that was the point of control, the volume point of control. I think I've got. Oh wait, I need a couple more here. There we go. I feel like I'm missing a data point here. Yeah, here we go. So this was last week's profile, and you can see that the most traded price was here at 20, and there's a high concentration of volume here at 22. So that was an untested or naked point of control for the week. So that was an area of unfinished business that represented why I thought, you know, we go to where we were going to go. But I could create, you know, profile in just a specific week, a couple days, an area of balance, which makes the software very powerful indeed. See, the last question is it true that short time frame traders use exact points of reference? Meanwhile, if an OTF is present, they will use zones. You know, I've seen guys who are, you know, day time frame. They'll look at a specific price. One of the things that I will look at as a way to know is the day time frame trader in control, or is the other time frame trader control, is reference points like an open price, or an overnight low, or an overnight high. Given that there's a high probability that we will trade across an overnight high or an overnight low, or, you know, an open, for example, it's a very distinct price level. That's one they'll look at. If it's a daytime frame trader, they're gonna respect something like an open price, other time frame trader won't. So, you know, if we're close to the open or, you know, or the close of the prior day, other time trader doesn't care. You know, day time frame trader will. You know, we didn't touch yesterday's close. We went rocked and rolled. Okay, so those are some examples. I'm recognizing that I'm just blowing through stuff, but I also want to be respectful of everyone's time. You know, I think kind of the chief thing to take away from this is that, you know, if you're looking at an auction trying to discern support and resistance levels, you know, where have we spent? If you don't have access to profiling data at volume at a price, you know, where have we spent the most time? Can you identify zones where we've spent a lot of time or there's been an overlap of price? You know, if you have an area like that, you know, like we have this large bracket here, you know, one of the other behaviors, and that also plays into a support and resistance, I think it also, you know, lends to, you know, why I might potentially short up here, is that if we don't spend a lot of volume, and I'll have to look at the volume data later to see how extreme today was, but if we press higher, run out of steam as we get closer to this bracket extreme, very likely that's going to contain the trade and then we'll come back the other way. So in some sense, this is an area of resistance based on, you know, where we've been, and it's just a different type of resistance than a zone like this. It's more likely we get a swift rejection up here than in an area like this. So even going back to one of the questions about, will short time frame traders use exact points of reference? Meanwhile, if an OTEF is present, will they use zones? It depends on where we are in the auction. I mean, if we're in an area where there's, you know, high volume, we're likely to chop and just kind of spend a little bit of time there, you know, irrespective day time frame trader or not. Okay. One of the examples someone wanted to look at was Tesla. And I did say at the onset of this that this works whether you're looking at a stock, currency, you know, I'm in the futures complex, but, you know, same thing. So, I mean, here's just a couple things that I'm noticing looking at the Tesla profile. And again, each one of these profiles is 1 week. Okay, so, you know, if these were weekly candles, what you're looking, it's like you're looking at X-ray vision into that weekly auction to see where did we spend a lot of time. I mean, look how much more. This is a great example. Just look how much more data you have here than if I was to say, let's just do a driving a really stark comparison. All right, here is a weekly chart. Ooh, go all the way over there. Here's a weekly chart in Tesla, and here's a weekly chart in Tesla. These are actually, let's actually get these a little bit closer in terms of the charts. Look how much more data and idea that you have here. In fact, let me do one more tweak here. Get these really close. Okay, look how much more you have to work with the profile than just a weekly candle. I mean, I could look at this and go, okay, maybe, you know, what do I got to do? I got to draw some trend lines and stuff like that, you know. You know, I guess that's what you do. You do some of this kind of stuff. I mean, you could at least identify that here's a bracket where we've kind of been in the similar prices, you know, which equates to this zone. But look inside this. Look where we just most recently traded. Look how fast we moved across this. And if we move higher in Tesla, where are we likely to go? Where are we likely to slow down? What's a good target on a break higher in Tesla? I can tell you right now, it's 211. That's where we're going to go. And you know, talk about, you know, defining a trade and defining risk. You could lean against the fairest price from this week at 195. So any pullback into 195, you could say, all right, I'm going to buy Tesla, and I'm wrong if we get below 193, and my target is 211. How's that for being able to discern, you know, how do I know if I'm wrong? How do I know if I'm right? What's my target? You know, where would you pick that looking here? I mean, I guess you'd look at, you know, do you look at a fib? Is that what you look at? I have no idea. Although I will, you know, will say, I don't look at fibs often, but when I see a fib correlate, and let's just see, oh, look at that. When you see a fib correlate and have confluence with a profile level, that becomes a very powerful place indeed. So this 211, big level to watch in Tesla as we go higher. So that's great example. All right, let's look at YY. I don't even know what that is. YY? What is YY? Are we looking at some pharma company? Is that what this is? You got me looking at pharma. Tech. Oh, even better. Okay, so let's look at this chart. Wait, that should be 9 months. It should be 30 days. 3 months. Or wait, 30 days. I can't go that far, can I? 3 months, weekly chart. Now we're close. Okay, here's the bars. Here's the profile. Okay, now look, what could you do on the bar chart? You could say, all right, yeah, there's an area here and an area here that I can define. But what do I do inside that? I mean, there's 55, there's $10 of range in here. You know, what am I going to do? Oh, well, right in the middle of it, 51.57 is the fairest price. So unless we can get below 51.57, there's no chance I'm going to 45 at all. In fact, I mean, you could look at this, this double top. Now here's an area where we have rejected, and the rejection, some people will look at, oh, it's just a double top. But here's what also happens in a double top. See how the volume just completely dies off here? There's no participation whatsoever. So there's swift rejection here. That's an area of rejection. That's an area of resistance, just a different type of resistance. Now here, if you look at this week's profile, we've engulfed last week's auction, but we're a little top heavy, and we've moved swiftly. We're a little top heavy. So, similar thing. You could say, hey, tomorrow, I'm going to be short YY. I'd be wrong if we got above 55.93. Just perfect. Yeah. Perfect example of short-term traders right from the open today. Well, let's. I mean, if you want to look at who is in control on today, we'd have to look more. That's where I go, and you can look at a TPO chart, to see this and see what kind of open it was. Was there news related to this trade today? Anybody know? Nothing news related. Okay, very odd. I mean, this is a, then this could be a turn in this auction. And the reason I say that this could be a turn in this auction, this is a neutral day, meaning that we have range extension to the, upside and to the downside with a close. Well, I mean, it's closed in the center of the range, but, with a bearish skew, value is overlapping to lower. And we left prior day's value, which was to be expected. See this profile here had a bullish skew. It was an incomplete auction. That's a poor high. So very likely that we were going to get a higher price, which we did. And then they rejected, came back into the prior day's range, auctioned across value, and closed lower. So this, that I think that's going into tomorrow. I would definitely be targeting the 52.45. I mean, at least on the 5-day. 51.57. So here's your 52.55 on your 5-day. Now there's an area of support right in here that they'd have to cut through. But again, this is a different area for support than a high volume area. It's a low volume area, so the behavior is going to be different. Once you kind of start to see those different behaviors, you're in a place that you can really peel all that back. Okay, I probably got time for one more example if anyone wants to look at one, and then we're going to close it up. All right, that's awesome. Somebody's got to run. I got to run too. Okay, hey, real quick, coming up next week, and not just next week, but this is kind of a thing that we're going to be doing for basically once a month forever. But we have a 3-session quick launch workshop to help traders decide whether trading is for them or not. I don't know how aware you are with the stats, but if you're a speculative trader only, not using trading as a risk management tool, it's about 3 months is the run rate before you stop trading, because you just can't do it. And I'm of the opinion, if you're going to be a trader, knuckle down, do it. Don't waste time trying to DIY it yourself. Saves you years. I know guys have been trying to teach themselves for 10 years, and all they're teaching themselves is how to not trade. So I'd rather someone invest the time, put together the plan, and learn how to trade and do it than waste that time. And if trading's not for them, then that's awesome. That's actually a win. Go do something else. But having some clarity around that. So you can go to marketprofiletradingacademy.com/workshop to find out about that. There's 3 sessions. Each session is 1 day. We do those 3 sessions 4 times a year, and they just will rotate. And they're standalone, so you can take all 3, which is the whole course, or you can take them individually. And kind of my big deal is, the whole course costs less than 1 futures contract. So if you're going to be a pro and trade futures, then hey, here's your first contract. And if you don't find significant value in this and it doesn't move you forward, I'll just give you your money back. It's that simple. So take a look at the workshop. If you want to be with a community that is looking at profiling and support and resistance on a daily basis, we use Slack. I've got a free Slack channel. So if you're not in our Slack, please get into our Slack channel, talk to me. I'm in there all day. I love jumping in there every morning and keep talking with our community. It's growing, and we're having a lot of fun. We're sharing ideas and learning together. So you can go to our website, to our contact page, just ask for a Slack invite, and we're happy to give you that. It's totally free. Will always be free. And that's a way to have kind of a proprietary place to work on this. That's it. The MO for all of these has been, we think that the competent traders make better markets, and I'm hoping that today, helped you with a different approach to look at markets, such that you could gain a new level of competence. So with that, everyone have a fantastic Thursday. If you're going to do something fun this weekend, please do. I know we got quad witching tomorrow, so not going to be a big trading day. So I'm going to try to get up in the mountains, and it'll be a good time. Yeah, one question was, do we do hourly sit downs as well? Yep. If you want to talk about that, shoot me an email on the website. We can look at all of that as well. All right, everyone, have fun. We'll send this recording out to everybody via email, and then we will also post it on the website per usual, and look forward us to do another one in a couple weeks on the next topic. All right, peace.